presentation. We're going to do a quick workshop, Central Bank Digital Currency, a Global Perspective. And this is Mr. Vikram Pandya, Director of Fintech, SP Jain School of Global Management. Thank you for your patience, sir, and over to you.
Thank you. Good afternoon, everyone. And I know that this is the session just after lunch, so just making sure that you guys will stay awake, and this will be more interactive session than any of the other sessions that you may have so far attended. The idea is that this topic looks like very boring, right? Central bank digital currency. What is that I am supposed to do, given that it is something which central bank will do? And in India also, if you logically think about it, initially we will be having not the retail CBDC, but the wholesale one. So why even I'm directly bothered as of now? But the interesting part is that, remember that opportunities, as soon as you know about them, better it is for you. And second thing is that whenever you are looking at the growth of the market, it is slow and steady step towards that. So once you start understanding this space, it allows you to look at the global opportunities, not only Indian opportunities, given that CBDC is global in nature. And it is the framework, concept, the architecture that we are going to discuss. So very quickly, setting up today's agenda, in next 1 hour, we are going to cover what CBDC is all about, what is that you are supposed to know about CBDC. Second thing is that how CBDC may impact you guys, and then what are the opportunities within that. Then, not only in India, across the globe, what are the different frameworks, architectures, implementations, POCs which are done. And finally, concluding with how can you design, right? One CBDC, if let's say you are working with regulator or working for regulator, how can you design that we can identify, understand the opportunity there as well? And what are the concerns which are there, which you should be aware about as a citizen, as a user of that CBDC? Ultimately, you are going to be impacted. So this is the agenda today. And the interactive part will be that we will look at some of the live examples, and I will be asking you questions on what are your views on some of the things and why. So we will ensure your inputs are covered, and questions whenever you have after a concept is covered, feel free to raise your hand and we will discuss about your questions. So with this, let's begin. First and foremost, a very simple understanding around what is the CBDC all about, right? What exactly is the CBDC and how do you see CBDC working in current environment? Very quickly, a summary of how fiat currency works, you all know. So I don't need to explain in detail, but to understand that rather than doing barter with commodities, you are trying to identify, okay, what can I create which can allow universal acceptance, correct? And that is where the fiat currency comes into picture, that is backed by government and you have the trust. The majority people can trust today's fiat currencies because you have government trust. When the ecosystem is changing and you can no longer trust the government, at that point in time, you look at the second option. Can I look at something different, right? So you have seen countries like Zimbabwe where the inflation is so high that you can't even trust on your own local currency or government. And that is the time when people start asking this question that what can I do? But at the same point in time, while you have alternative digital currencies which are available in the market, you can't still have a proper functioning economy unless until everyone is accepting or trusting that single currency, right? When we think about local and then go global, from local to global journey is very difficult even when we talk about fiat currency, let alone digital currencies and central bank digital currency. So within the current ecosystem, just to divide this into two parts, you have first set of people who are looking at CBDC as a new opportunity, while others are looking from challenge perspective. They are skeptics. very quickly understand what are the benefits and what are the challenges that you might see, right? So this is nothing but digital representation of fiat currency, but directly issued and managed by central bank. There are no intermediaries directly involved. In India, what you will see as an architecture, for the wholesale it will be different, and for retail it will be different. I'm sure many of you are aware about RBI's retail platform for the investor, right? GSEC and other investment around the T-bills you can directly get from the RBI website now. So that is what you can compare this with. There you don't have an intermediary, you don't have banks involved there, you are directly going to RBI platform and getting security, government security, and the same concept you can imagine here, where you are approaching RBI and you are getting the currency directly. Now, what are the implications of something like this, right? Because end of the day, you go ahead, you get the currency in your account. In India, it will be account-based system, which we will see later how it works. And in some of the countries in the world, you have one token-based system, which means that it can be stored in a wallet as well. Here you have account-based system, which means there is a specific account that you will maintain. Very quickly, dividing this further into two parts of how the CBDC can function in country like India, where you have majority of the people who are not even currently able to use technology, right? They are not clear about how to use technology. But the good part is that with UPI, we have seen different channels of digital payments. Not only a simple net banking, but you have now, as you may have seen, UPI Lite, UPI 123, USSD, which was created for feature phones specifically. So you have multiple channels around how rupee can be used even from the pure digital part. Tomorrow, when the CBDC goes live, in India, you will further see that some of these different features and channels that you today see will be combined together. To give you an example, e-rupee. E-rupee is an instrument. It is an instrument which allows you to make a conditional, person-specific and purpose-specific conditional prepaid voucher, correct? Which means that you go ahead, you try to use it for some other purpose, it will not allow you to use, because the issuer, currently who can be only government or corporate, can issue this e-rupee voucher and it can be utilized for a specific purpose at set of merchants only, okay? And here when you think about how this will benefit overall in future, CBDC by nature will have one smart contract layer if it is on DLT, which is distributed ledger technology. Or even if you don't have DLT, let's assume it is a traditional system without any decentralization, still you can have a specific condition-driven layer which can allow you to integrate with multiple different use cases. To give you a couple of examples here, let's say that today when you are trying to issue an invoice, GST invoice, right? The major issue that country faces that GST invoice, the moment you issue, next month, by 28th of that next month, you are supposed to make a payment. So it creates working capital mismatch and you need to borrow, right? Unlike that, in CBDC world, what you can do is that you can directly deduct payment whenever the actual payment happens. Why? Because the invoice itself is in this CBDC, which can be smart enough to understand that the payment is now being made using CBDC and I need to collect this much amount as GST, or I need to deduct this much amount as TDS. Based on the settings that you once do, those things can be automated. So that creates that condition-driven layer, smart layer. So you have another advantage where you have monetary policy and fiscal policy are getting more effective. When we think about it, today what happens, right? There is a delay in transmission of monetary policy. You have RBI in so many meetings that they have mentioned, right? And if you remember, earlier RBI had base rate. Remember, you had base rate in India. Then they changed the base rate to MCLR. Why do you think that happened? Because even after base rate, even before that there was a PLR, prime lending rate. Even after base rate, the monetary policy transmission was not happening as effectively as they wanted. And because of that, they tried to ensure, using MCLR formula, every change that they are doing through the policy rates can be transmitted to the ecosystem as soon as possible. Here, given that it is directly connected with central bank and there are no intermediaries involved, you can have 100% transmission of monetary policy fastest way possible. And because of this, you may see impact of policy much more apparent and effective. Fiscal policy, how? Because people may think about CBDC directly linked to RBI or central bank, but even fiscal policies you can effectively monitor. How? So we discussed about the conditional payment or conditional outcomes when the payment is happening. Now let's talk about conditional payment itself. Fiscal policy, you can have use case driven benefits, correct? You may have seen that government is doing away with Chapter 6 deduction. You may have heard about that, right? So when the Chapter 6 deductions are going away, how can you incentivize certain policy? Fiscal policy, today you require someone to ensure that those policies are as effective in the final intended outcome. So here what you can do, you can have those fiscal policy embedded as a part of your payment. It is a payment outcome driven fiscal policy implementation that you can do. And that can create another level of opportunities for everyone involved. And this ecosystem can thrive and survive given that it is government backed and you will get output very quickly there as well. So same thing as I mentioned. And finally, cross-border payment. Cross-border payment, why? Because end of the day, it is of no use unless and until you can replicate current system which allows you to trade across the country. And in India, you start with CBDC and that CBDC should be interoperable with the global standards. So we'll start looking at how it is going to work, how things can work out within the ecosystem. And very quickly, I wanted to highlight what is the status, but we'll discuss more in detail about how many countries are working on CBDC, what is that they are doing. Very quickly, retail barometer, what people think about CBDC in different countries based on the survey taken, latest survey taken. And you can very clearly see that almost all the countries in average, if you see the first column, none of this I would not consider using a CBDC, 23%. But Germany, like country where GDPR is more prevalent and they are more worried about security, privacy, control, you can clearly see that number is much, much higher. Similar in US also, where you have privacy concerns, where you have people who are thinking about how government will misuse the data, misuse the authority, there you will find the reluctance in acceptance of this entire model. Another point that I wanted to make out of this chart is that there is a trilemma effectively in implementation of CBDC. Number one, if you want to control and trace, then the acceptability becomes an issue. So if you want to control and trace, effectiveness also becomes an issue. At the end of the day, if you don't control or you don't trace, what you wanted as an outcome sometimes may not be achieved. So at one end, you want acceptability. Second, you have effectiveness of the entire solution. And then third, you want to track and trace so that you can identify terrorist funding, you can identify some unproductive utilization of resources, direct benefit transfer. So all those things that you are normally looking at, how can you track and trace? All those issues are there. And this trilemma is going to be very difficult to handle in case you want acceptability across the nation, not only in India, not only in few countries, but across the globe. So what does that mean? Does that mean that it will not be possible? No, that is not the idea. It will be possible, but it will evolve over the period of time. And people will always start with some suspicion, and that will go away as and when it becomes more transparent. You have governing standards, and in India specifically, if you look at, right, Once Data Privacy Bill comes into picture, which is Personal Data Protection Act, once that becomes effective, you will definitely see either a special carve-out from the bill, or you will see some specific mentions around CBDC, how it will be handled. So that is what we see, given that India is going to launch wholesale CBDC by 2023. So let's think about how the structure architecture works, and we will take example of certain questions to look at the design of CBDC. So before you implement, as RBI or any other central bank, before you implement CBDC, these are the 5 questions that you ask. Why? Are you implementing to track and trace control, or are you implementing it to increase the monetary transmission pace, or are you implementing it just for the PR value? There are many projects which we have seen across the globe, banks doing some blockchain related stuff. It is a pure PR value for them. They are not serious about it, but that will fail. It will fizzle out. So you need to understand why you are doing it. If you are doing it for long term, take your time. No need to hurry. Look at the POC. We will see one live example of Project Ubin, which has done great amount of work under the POC, where over the 5-year period, they had gone phase by phase and implemented wholesale CBDC effectively. Second, what? Refers to type and model of CBDC to be eventually chosen. Now this we will see what kind of type and model that you can choose, but architecture wise, there are 2 architectures that you need to worry about. One is operational architecture, and second thing is technical architecture. Operational architecture is more critical, given that technology a vendor can handle. You can ask vendor to handle technology, but operational architecture is your baby. As a central bank, you need to identify what level of integration that you want with the ecosystem, who are the participants and how they will participate, what level of access control that you want them to achieve, and those things are going to be very critical when we go ahead. Where and how? Sometimes, as I mentioned, you want to start with POC. You can't have a big bang. If you have a big bang, then most probably it will not be accepted by majority of the people, because you don't have education, you don't have people understanding what is this all about. So majority of the time you have to start with some POC, look at what are the results, and then you start with the big bang, right? Then how? How will you implement it? Is it going to be account backed, or is it going to be token backed? If it is the account driven, then who will have authority over the account and how the account will be handled? Is it going to be a wallet driven account if it is a token, and who is the custodian of that wallet, right? Is it a custodian driven, or is it a non-custodial? Those are the questions. Then who are the participants, as I mentioned, and all these things once you identify, then you are deciding on the architecture. So what kind of architecture you may end up with? CBDC architecture, one is indirect CBDC, which is synthetic 2-tier multi-sig. Now here very quickly we'll understand. One, the CBDC is claim on an intermediary. So here you have intermediary involved. You have central bank on the leftmost side, and then you have CBDC bank X, Y, and these are the banks which are part and parcel of this ecosystem. And then you have merchant and customer who are part of banks. This is the model which is useful for retail CBDC typically, where you have a indirect CBDC model through intermediary. Okay. Second one is direct CBDC, where central bank is dealing with merchant, customer, and this becomes your direct CBDC model where no intermediaries are involved. And then you can have hybrid model where you can create a specialized approach, similar to how payment banks are created, similar to how a special purpose intermediaries are created. You will have an option to use ecosystem to distribute, but people can also come to you and get it, right? So CBDC can be hybrid as well. In India, I personally see that for wholesale it will be this, direct CBDC, and for retail it will be this. That is what I envisage, and given the talk that we have seen in public domain, given the discussions which are happening, these are the models which we may end up with for wholesale as well as retail. Globally also, if you look at US, most likely they are also going to do the same thing. Singapore, same thing. So now we are coming to one such project called Project Ubin by Singapore as a case study to look at what they have done, right? How they have done it, what they have done. And I am going to very quickly show you different phases of that project. I don't know whether it is visible to everyone, but you have phase 1, which started in 2016. Okay, this was the phase 1 which started in 2016, and that phase was around how to tokenize SGD. And as you can use this word, you can understand the word used here is tokenized. So it is a token-based approach and not the account-based approach. Okay, it is a token-based approach. In India, we will see account-based approach. We will not see token-based approach directly. And when I say token, it is similar to how digital tokens work. You will have a wallet where you will store this. It can be a public wallet, custodian wallet, non-custodial wallet. Then they identified the ecosystem players who will work together. So all these players were identified, and a consortium was created which started working on the implementation of the project. This was the phase 1, and it ended after 1.5 years. So then the initial use case started as a phase 2, where RTGS, which is real-time gross settlement as you know it, and RTGS system was envisaged, and in India also same thing is going to happen. As you know, wholesale CBDC in India, when we start, same thing will happen. We are not going to look at retail use case as a first use case. We will exactly have similar model where RTGS will be explored, and we will see settlement happening on a real-time basis on DLT through CBDC. Here, banks will not be involved. For India at least, that's what we have seen in public domain for wholesale. So there you had several banks which were involved. Then you have, so all these technology partners were identified, phase 3. Under this, capital market use case was taken, phase 3. Delivery versus payment, the settlement, etc. was taken as this phase, and this started in 2018 and ended in 19 when the COVID hit immediately after that. So after this phase, phase 4, when it started, right? It fortunately started in November 2018, but when it really got implemented, it took much more time. And cross-border payment and settlement, when this use case came into picture, you had so many players already working on CBDC internationally, interestingly. We'll see how many players are today working on CBDC. But because of this, Bank of Canada, Bank of Thailand, all those different banks were in talks to look at the interoperability. And that got finalized as a part of phase 5, enabling broad ecosystem collaboration. This is where MCBDC bridge with BIS and UAE was created, and this bridge allows for the interoperability of various central bank digital currency. So these were the 5 phases which Project Ubin used. Fortunately for us, we already have good amount of learnings that we have seen in the ecosystem, and when India is implementing, we can use certain parts from whatever others have done. Like MCBDC or even alternative to interoperable bridge that we are trying to create will help our position overall. Let's look at another part of it, which is on the technical architecture. Many people may want to know about how the technical architecture may work, right? So this is the simplest way you can see the entire architecture. You have these activities as a part of CBDC: issuance, transfer, redemption, conditional payment, and reconciliation. If you have a smart contract, these are the things that you can go through. As you can see here, you have a multi-currency blockchain-based payment network. Project Ubin was built on Quorum, JP Morgan's DLT, which in fact is derived from Ethereum. Now, when you think about this, you have key management. Here is when the HSM comes into picture, hardware security module comes into picture. And you have new opportunities here. Those who are IT vendors, you will find good amount of opportunities because you will require UI architecture. This is not going to be a small one, right? Then you have gateway, and this gateway, and this gateway, right? Here you have a payment channel, and this gateway is around the UI, UX, and APIs. Both the gateways will allow for the interoperability within the country. Understand the difference here. This interoperability is within the country. And when you connect with MCBDC bridge, for example, then it will become interoperable across the globe. In India or in Singapore, when you are trying to integrate, this is what you end up with. You have UI, UX, and APIs, which is allowing you to integrate with the system. And this gateway is across the channel, payment channel that you are having. It will allow you to become interoperable. But at the same point in time, this smart contract architecture, which you have here, will allow you to work with the smart contract network, whatever Ethereum or Polygon or let's say R3 Corda, whichever bridge you are using or framework you are using. At the end of the day, it will allow you for the conditional payments. And this conditional payment, as we discussed, can really change. You can have a fiscal policy implementation via payment. You can have even the collection via payment. So taxation can become integrated as a part of payment, as we already know, but much more effective than what we have today. Even operationally, it will be less costly, given that you are not supposed to do any other compliance. Everything is payment driven, right? You don't need to file any forms. As simple as that. Everything is covered through invoicing itself. And today also, you know, under UPI, you have a feature. Under UPI 2.0, there is a feature called invoice in the inbox. Okay, under UPI 2.0, you have invoice in the inbox as a feature. And this feature can be extended to CBDC and it will become invoice in the inbox, pay with CBDC. And once you do that, this entire thing can be interconnected and you can have much more robust ecosystem where the cost of compliance goes down, your effectiveness around collection goes up, and the cost of even checking the compliance, not only you doing the compliance, but for the government, cost of making sure or ensuring that you have done the proper compliance also goes down. Okay, so this can create huge operational efficiency across all the participants' entire value chain. Coming to some of the use cases which were useful using the Project Ubin. Under capital market, under private equity, one exchange created private exchange to facilitate trading of equity, OTC market basically, right? This is what they did. Then they have done another private equity around the iStocks. This is the issuance, custody and trading of digital securities. Bonds and debentures, this we'll see one more time when we cover Germany's example and Eurobond example. They also have done this same thing. Syndicated loans, both primary and secondary syndication they have done, and they have achieved this latency of less than few milliseconds to make sure that it is robust system. Multi-stage investment and disbursement of the infrastructure asset, and then finally cross-border settlement. These were some of the use cases in capital market. Similar to that, you have use cases in trade finance. I will just summarize very quickly. It is divided into two parts. One is documentation of supply chain, and second is around the settlement of supply chain or supply chain financing itself. And finally, you have use cases around insurance, where using the smart contract, you can do the entire life cycle management of healthcare insurance claim and sharing the information. In India, interestingly, you have Abha, which is National Health ID. And this National Health ID is already getting integrated under SSO with Meri Pehchan. There is one SSO which we have created called Meri Pehchan. This, once we do CBDC, can get integrated directly with this the platform that we discussed, and this entire thing can work seamlessly. Beyond financial services, in media and advertisement and salary payment, it was used. Okay, coming back to some of the other projects which were popular. Right? So MCBDC Bridge I mentioned about. So it was in September 2021, last year itself, when Thailand, Hong Kong, China and UAE came together with BIS and released the report. And this M-Bridge project now is on phase 2, where entire CBDC landscape will talk to each other in a standardized format. Similar to ISO standard, they are trying to create a way in which you can communicate across this different CBDC. This is mainly for wholesale, not for retail. As we know, for retail you have different complication for different countries. Country like India, you have very different landscape in retail CBDC versus someone like Singapore, for example. Right? Much smaller country, much less complexity. And if you look at, let's say UK also, similar example, right? Same. So you can compare Singapore with UK, but you can't compare India with them. Now, Project Dunbar. Here Australia, Singapore, Malaysia and South Africa with BIS again, they began exploring international settlement through the blockchain, and here same multiple CBDC were used and they were trying to look at how it will scale up. The result was that scaling up was a challenge earlier, but then under the new architecture they were able to scale up rapidly, and that was the main outcome of this project. Similar to that, you had multiple such projects, but to give you some summary, here you can see all these projects were wholesale projects, right? None of them were retail. And the only reason why you have not seen this retail right as of now is that all these countries, it is a multi-country project, and all these countries can come together only when you have a common ground. And the value-wise, when you look at value-wise, highest transaction amount will happen in wholesale, not the retail. So few more projects that I wanted to highlight. All of them are wholesale, right? Just wanted to mention that everything is around wholesale, given the reason. Okay. There are few more comparisons across different countries. What is that they are trying to achieve? What I will summarize here is that the main component, right? What was the main motivation when they started? And then when you look at whether it was interest bearing or not. So apart from one country, none of them you can see is interest bearing, and you will not see 95% of the countries in the world going for interest bearing CBDC. Can you tell me the reason? Why do you think interest bearing CBDCs may not work? Anyone? You get interest on your savings account. So why do you think even for retail project you cannot have interest on CBDC? If you do, what may happen? Logically try to think what may happen if you have interest on CBDC. That is a side effect. Come on, just attempt. There are no marks for this. Sorry? Currency creation, that is fine. Today also you are doing, let's say, cash printing. You are just replacing that. It can destroy entire banking system. Why? If you are getting, understand this thing, right? If you are getting from the government themselves interest rate, on cash equivalent, correct? Then why will you keep it with the bank? No, but if you are saying with the bank, if you do, then it is different. If it is through intermediaries, right? I'm saying that CBDC by default will never carry interest. Understand like this then. If the CBDC is having interest, then the normal deposits will not be there with the bank, right? Then the normal deposit will not be there with the bank. You are always taking lower risk with government than the bank. You agree? So, even if you give 3.5% interest vis-a-vis 5% interest, many people may be interested with government, right? Why would I even worry? So, never ever you will see majority of the countries going for interest-bearing CBDC. And this creates a challenge, right? Because end of the day, interest is what people think you will get when you are talking about account-driven CBDC. But no, this is where you need to remember, interest-bearing CBDC will not exist in most of the countries. Then, what are the limits on holding and transactions? Do you have any limits? As you can see, Bahamas and under Caribbean islands, you have some limits. And what are those limits all about? It is around how much you can hold and for how long you can hold and how many transactions you can do. That was the limit that they had implemented. And why they had done that? Because you can stop holding in a way, right? That was the idea. In India, you will not find such limits initially for sure. And even if you find some limits, it will be around the end use for the DBT. So you may see classes of CBDC in future in retail. And you can have a CBDC type AB, for example. B is for DBT only. So whatever you get in e-rupee, for example, is a precursor to that, where the CBDC can only be used for certain purposes. And class A is, let's say, without any restriction, you can use it for whatever purpose you want. This will become the future reality. Similar to that, Universal Basic Income, UBI. You may have heard about this in multiple debates and whether to give UBI or not, whether it increases efficiency or not. But when you think about this, Universal Basic Income is a concept which will be required as we go for more and more automation. You have people who are getting obsolete, and then you need to make sure that some sort of tax is there on the technology to support these people in future, because you cannot really train the workforce as fast as the technological changes or improvement, right? And because of that, you will need to do something. And in future, you will see many countries in the world, they have tested UBI, and CBDC can have another category for UBI, where same thing you can do, that you can have the use case driven approach, and those things will have a different architecture, a completely different architecture around how you can track and trace, how you can do certain things. So this is the future that I foresee. Currently, as of now, we have not seen people directly using CBDC for UBI, for example, but in future, we will see that. Similarly, offline usability, you can see a couple of countries are providing that. In India, we already have seen initial push towards that offline payment mechanism. RBI, under the first sandbox cohort, regulatory sandbox cohort, which was on the offline retail payment, they have already tried and tested some of the offline methodology, and you will see CBDC in India may go for offline methodology as well. So this might be true for India. Okay. Then we have international access. Initially, we will not have, in my opinion, it will take some time, but under phase 2, as we become interoperable, we will have international access. And finally, most probably, while India is right now, as we speak, has not yet finalized on whether to use DLT or non-DLT based, given the advantages that we have on DLT based ecosystem, like no requirement of reconciliation, you have better tracking and tracing finality. In my personal opinion, they may end up using some sort of DLT mechanism. But as of now, nothing is finalized. That's what I know. Okay, coming back to the next part of the point where you have some examples and some tools. So very quickly we'll see a couple of demos and try to understand. This is in Thailand and Ghana. This company has implemented in Thailand and Ghana. There is no sound as such. You can just see this and understand how it works. So this is the prepaid card based CBDC, card based CBDC approach. So this is a dual offline. There is a wallet on your smartphone. UPI Lite is already there in India. Like you have wallet on smartphone. And in phase 2, as we know, UPI Lite will also support offline payment. This is the offline. And people say dual offline because you have one, just to give you some context, right? You have one type of offline which means without internet. You still require network, but it is without internet. So people say that also is offline sometimes. But here you have without internet and without network, both dual offline, right? That is what they are referring to. And this can work with two different technology. One is Bluetooth and second is NFC. But here, yeah, RFID, that's what they are using. But NFC is RFID technology only, by the way, just for your information. But another one is data over sound. Okay, NFC, RFID. Okay, done. So that was one example. This was a token driven as well as account driven. It can be anything. So this company implements that. And just to give you one example, right? This is the complete picture over where all are standing today. You have overall 112 countries, 11 have launched, 14 are piloting, 26 under development, 47 under research phase, and 10 are inactive or not publishing anything on that, to have cancelled completely. And those who have cancelled, so learning will become why they have cancelled it, right? For example, Singapore has clearly mentioned we are not going for retail CBDC as of now. Why? Because they were looking at the acceptability of CBDC in retail, and they realized that we already have enough payment instrument and channels in Singapore that CBDC will not add any additional value in retail. But for wholesale, they realized that there is a value. So they have outright said that we are not going to use CBDC for retail as of now. Similar to that, some of the other countries which have denied CBDC, same concern around, let's say government, today's government is good, but what happens if tomorrow's government is not good? And what if they decide to track and trace or put some features which are against the privacy rights? And that is when they decided that it is way too much of a risk for people to go ahead with this architecture. That is the reason that they have cancelled it. And those who are already working on that under development, right? You can see India is also under development. And now this will change. US, as you know, by 2023, they also are going to launch their own CBDC. And they are working on this actively. I don't know about US, but I can tell you India may do it by 2023, definitely. CBDC in US, once it is live, it will also have additional feature around the use case of CBDC in healthcare. It will be HIPAA compliant in some of the cases, how to make sure the privacy, etc. in the healthcare is preserved when the payment is made. So those things are being taken care of, and the framework they have launched and accepted very recently, as you know. Just to give you an example, you can also go through this later. These resources and links are provided as a part of PPT. You can go through them. So the idea here is that what are the use cases, and it is account driven. You can see access is account driven. Right now, we are looking at first wholesale, but later on we may look for retail as well, which we have communicated. Underlying technology, while it is written both, it just means that it is not yet finalized. They are considering both, right? Whether it is DLT based or non-DLT based, they are considering both. Let's look at summary of all the major projects. And this is like complete list of all the different countries with the technology. This file also will be provided to you later. This gives you complete in-depth overview of what are the technologies used by which country. I will just show you there are 27 out of 112, 27 countries which have selected DLT by default, okay? And these are the countries which have selected DLT. Yeah. Australia, Austria, Bahamas, Brazil, Canada, France, Japan, Kazakhstan, Sweden, South Africa, South Korea, US, UAE, Vietnam. These are the countries which have selected. Out of 112, 27 of them have selected DLT based approach. Okay. And when you look at company which is working with them, here in Switzerland there is a Jura company. I will give you a couple of solutioning how they have implemented and what they have done, right? I just wanted to highlight what they have done so far. And what is the account structure? So out of all the different countries, there are only few of them who have opted for both account and token. Like hardly 2 countries, Sweden and Canada, where you have both account and token driven. So in India, definitely it is account driven, we all know that. But there are several advantages of even token. And what is that advantage? It becomes interoperable with the digital asset ecosystem, which is otherwise not possible if you don't have token-driven approach. If you just have account-driven approach, then that requires another middleware for you to work with the digital asset ecosystem. Okay. Any questions so far before we look at some of the other examples? We have 5-10 minutes here. Yes. Sure. Yeah. Swift is different network itself, right? So what we are saying through the interoperability of channel, payment channel, you saw that? Just to bring that diagram again. So if you refer to this diagram, you can see payment channels, right? On this side. Payment channels. This will be part of that. Channels. Swift is also one of the way you are making payment, whether it is international payment or domestic, doesn't matter. It is just one of the channels. So it will become part of it. This will connect here. In future, it may consider. Right now, Swift is not carrying CBDC. Yeah. So I'm saying that is the reason you are creating this new architecture of interoperable CBDCs. If Swift was already supporting, you don't require that architecture separately any which ways, right? So in future, if whenever Swift is doing that, you will have a interoperable system there.
Okay, and the second question I had was about that interest payments on the CBDCs. If there is no interest, then why would anybody, institution or retail, hold the CBDC overnight?
Okay. Look, CBDC is replacing cash. Do you get interest on cash?
But it's still central bank. I mean, yes, I agree. No interest on cash, right?
So
Yeah.
that is what I'm trying to say. What is the message, right? Are you planning to replace cash or are you planning to replace deposit? That is the fundamental question. That's what I started with. Why you are issuing CBDC? If the purpose, and everyone agrees that the purpose is to replace cash effectively. And if that is the purpose, you should never ever even think about it. Otherwise, it will replace deposit. That is the simple answer.
No, but I just want to just take that one step further. If you hold CBDCs in your account,
Yeah.
then whether it's with the bank or with central bank, you will still not get any interest on it.
No, that's what I believe. You should not get. If you get, then you have incentive in a way to replace the deposit. You understand one thing, right? Can you lend out of CBDC?
collateral, maybe?
No. So that is the idea. So if you are, understand the fractional reserve system. You are saying central bank is issuing this, and then fractional reserve system will indirectly bring that back to the central bank. That is not what you want. You understand how the fractional reserve system works, right? Let's assume that you have 5% CRR and 20% SLR, which means that you can only deploy 75 rupee out of 100. And that you can keep on deploying as per the systemic multiplier, correct? So as long as you start with 100, you can deploy 75. Then you start with 75, you can deploy 25% less than that, right? You can continue that, and maybe you will end up with, let's say, 3x multiplier of 3x. That you can't apply here. You should not be able to do that. It has more economics than the simply mathematical issue.
So it's like holding cash in a safe box, deposit
Correct.
box.
That is what it should be. In my opinion, CBDC should be that. You can see it is not like that there are none of the countries who are doing this, right? We saw that there are a few countries which are doing it. But for country like India, which has very complicated architectures and different states are involved, right? It will not work. Yeah.
Just a follow-up to the questions that you were asking. It's very, very helpful when you're answering it. I just wanted to understand how will CBDC replace wholesale cash in India? I mean, how would that happen? Is something which I'd like to.
So the idea is that when you look at wholesale payment, right? RTGS when it started, just compare with RTGS. We will not talk about anything else. Just try to see RTGS. How RTGS works today? You have bank balance, current account. There also you don't get any interest, for example. Current account you have some another current account and you are transferring money, and you have directly a system which allows you to settle immediately. Correct? That is what it is. Now you have intermediaries here, like banks, which are involved. But when you are talking about CBDC, without intermediary, you are transferring CBDC between two participants, right? Who can be a Reliance and Tata, for example. Correct? Now when you are transferring this, it has much more advantage. The cost of that transaction is much lower, almost negligible. Second, because it is backed by government or central bank directly, you don't have any issue on the settlement as well as reconciliation side at all. You don't need to do anything on that side. It is DLT as well. So that creates that operational efficiency in the ecosystem. That is number one. Second, the main idea behind every CBDC that you look at is in future interoperability. Today, when you are talking about international payment, the cost of that payment transaction that you have is very high, and inefficiencies are also very high, right? But if you look at Forex as a business for the bank, is material enough. It is not immaterial. It is a huge business that you have, right? So, in my opinion, the balancing act will be required when we talk about the international payment, how it will be carried out. So far, I'm very clear about the domestic in India at least how it will work. But international, we will need to wait and watch, because given that it can be programmed or it can be condition-based, you can have capital account versus current account, implementation of CBDC separately, correct? And we will need to wait and watch on that area. But at least clear on the domestic side how it will work. It will just replace RTGS system with more efficiency and lesser operational overhead for everyone involved.
Right. So it's replacing RTGS. It's
Effectively, yes.
Not the
And
cash.
in future,
So
once you use that as a system, right? Once you open up API, you can allow fintechs to come and create supply chain based solution, right? That fintech will take care of. What to do with CBDC will be taken care by fintech. Similar to how UPI was released and fintechs figured out what to do with UPI. Yeah.
So India had attempted demonetization some time back, and the idea was to get rid of informal economy, ensure better tax compliance, etc. So if we are to assume that Reserve Bank of India is to, let's say, offer 10 basis points, right, or 25 basis point on the CBDC deposited, and that would ensure that there is incentive for, this is essentially a surrogate for physical cash.
Negligible, that is fine.
But people who hold
Negligible
cash,
is fine.
so why can't we attempt having a, Because it
that,
will incentivize.
that may even happen, I am saying. Negligible like 0.5 basis point or 0.5% or 0.2
Exactly.
basis point. Yeah, those
Exactly.
things are
So
fine.
we can essentially ensure that this larger value denomination of
20,
currencies.
50 basis point is okay.
Exactly.
That we may even do.
Exactly. That was the.
But I am saying that you are trying to incentivize people over cash, but at the same point in time, there is enough disincentive for them not to replace deposit.
And there is also cost in managing currency. You need to print it, transport
Correct,
it.
correct.
So obviously this 25 basis point will possibly kind of
So
offset
currently,
that.
if you look at per basis point, right, it is 60 to 80 basis point of overall cost of the circulating currency in managing your entire thing, right? So any which ways you are saving that out of, if you will not save everything, you will save maybe 30, 40 bips. So 50% you are saving. You can definitely pass on the remaining one if you want to. But as of now, none of the discussion paper outlines that. So I am very skeptical on that, but you can do that.
Okay.
Architecture-wise and design-wise, it is a good practice to do that so that people can use that. Definitely agree on that. Any other question, anyone? Yeah. You can pass it on to him.
So I just voice it out.
No, I think for the recording purpose, I can hear everyone by the way.
Yeah. I think one question basically in terms of the success rate based on the studies that you've highlighted, was there any failure rate that was identified during the studies of CBDC?
When you say failure rate, what kind of failure?
Failure rate is basically when you have a transactions which is happening either through distributed ledger or any other means. There are chances of transaction not happening or failing.
You are talking about technical failures, right?
Yeah, technical failures basically.
There were many. That's what I said. In one of the projects, scalability was an issue. So they had to work with the revised architecture for scalability. Those kind of problems we have seen. Another problem was around, let's say, diverse systems, right? So they had to, again, rework their architecture for working with different architectures and systems. So those were the challenges which were seen. But failure, when you think about, this was a POC in a way, right? And wholesale, for example, everywhere we have seen wholesale. So you will not find acceptability issue as such there. So that kind of issue will not see. But technical issues were there, definitely. That is the reason everyone started with POC. You want to understand which is working, which is not working, what is the fine-tuning that you require for the system to go ahead. So all those things they have tried and tested. So all these systems which are there, in fact, there are 100 plus pages of white paper for every project. So if you really want to get deeper into that, you can go through each and every white paper which they have published. Even with BIS, and there are independent countries who have published their own white paper on what they have done, how they have worked. Just to give you one example, Ghana. That example which I have shown you in Ghana and Thailand, they have also seen this, right? So there, they have tested both retail and wholesale in Ghana and Thailand. So what was the outcome? Same thing, that people were skeptical in terms of what to do, how to use it. Training-wise also it took them some time. There were operational issues there. Those are different again. So POC-wise, there are issues, then you are having technical issues. But definitely in future you will find those things are ironed out. Because ultimately POC can't give you the real world scenario, definitely. So you will have new issues emerging as you really implement, right? It will be figured out over the period of time. It is not a one-day journey, nor it is going to be a one-stop journey, right? You need to have a continuous iterative process. Identify issues, try to create a roadmap of how you will prioritize, which issue to prioritize. It will take some time.
And will there be any speculative thing which currently happens in other crypto-based currencies?
No.
Will there be any part of that? Because it's not really backed by any asset
It is
reserves.
backed by.
It's backed by central banks, but yeah, not anything.
It is backed by, similar to, just think about it. You are replacing cash, right? What kind of speculative things you can do with cash? Nothing as such. Speculative as such, right? Here, in fact, it is more transparent. So you will not even have illegal things directly happening, not easy to do. But if you want acceptability, as I mentioned earlier, and you want to really keep it anonymous, then you can have several other issues. But still, it has that track record and recording of the transaction, immutable data, right? So that will have even more benefits. So you are looking at benefits when compared to cash for sure. But yeah, if you want to have illegal activity, etc., that is not possible directly.
Just trying to understand, will this change in any way the dynamics between valuing currencies and the volume of currency in circulation? Long term, not right now.
Long term, it may. Short term, no. But long term, why it may? Think about that, right? So if you really look at some of the currencies which are getting more global acceptance, let's say, right, that trading or quoting of that currency, today you have one market. If you have token-based currency, for example, you will need to have definitely two separate markets which will be interlinked. So there will be new arbitrage opportunity, number one. And second, because of that circulation and volume and value both, you will find some opportunity over there saying that, okay, how to value this in this sort of environment, right? Because sometimes the future use case or future amount that you require is hidden today. Today you can't see that. But with this sort of CBDC where everything is recorded, even the future usage you can see. So there will be more transparency in some of the transactions that you may have happening in future. Today it is not there as a market information. So it will reduce the information asymmetry further. So definitely you may have a different value attached to that. And it will also open up some of the opportunities in arbitraging and hedging. Those are the opportunities you will see.
But then where does, I don't know, maybe I'm wrong, but how does that draw the line between, say, the concept of just printing money and this?
So printing money, understand this. Printing money is one activity where you are generating exchangeable instrument. As simple as that, right? Now, whether that instrument is physical or digital, the only thing which can be improved here is velocity of money.
Meaning?
Velocity of money, when we think about that, here, because it is digital, etc., you have much faster velocity in principle. And also when you think about on the retail side, right, if you are tracing it even, let's say not at personal level, but on an ecosystem level, you are tracing which use cases it is getting implemented in, you can have a better policy making, which is not possible in cash.
Okay.
Right? Policy making with privacy, I'm saying, not without privacy, with privacy, you can still do better policy making. Just think about COVID, where majority of the money is going. If you can track, you can really use that information to do real-time policy making.
Okay. Fair enough. Thanks.
Yeah. Yeah, last question, so sure. So quickly we will try to discuss these two questions.
Yeah, so basically I just wanted to know, like, let's say a central bank, any central bank adopts this retail CBDC, right? In that case, how the transition is going to happen? I mean, is it like overnight, today there is cash and from tomorrow it's
No.
CBDC, or like how the transition is going to happen? And secondly, what if like cash is also existing there and CBDC also existing there? Then how the whole settlement process, you know, like intermediary, there will be banks, and at the end there is settlement. How that settlement process will work?
In interest of time, I will summarize this.
Yeah.
First answer is that yes, they can coexist, and it will not be a big bang any which ways. You can't do that. We have witnessed that in past as well, and I'm sure we have learned from that. It will never be a big bang. Second thing, it can coexist, as I mentioned, so it will work together. There is nothing which is stopping you from converting CBDC to rupee as well, right? Actual physical currency. So the answer is very simple, it will coexist. So yes, I think we have run out of time. I will catch you at any other closing remarks that you have. Thanks for your time today. Bye everyone.
Give it up, guys, give it up. An interesting, very enlightening workshop that we just witnessed. Well, coming up right next is a fireside chat, and we would take 2 minutes for the setup here. So we can break for a 2-minute short break, and the ones who would like to retain for the same, please be seated till we resume back. Thank you.